Basics of securities market. What are securities? Securities refer to financial instruments that are used to raise capital in public and private markets. There are primarily three types of securities, namely, equity provides ownership rights to holders. Debt, loans repaid with periodic payments. Hybrids, combination of debt and equity. Securities market, a market in which securities are issued, purchased by investors, and subsequently transferred among investors, is called the securities market. Functions of securities market: enable the flow of capital from those that have it to those that need it, help in the transfer of resources, provide channels for allocation of savings to investments. Concept of risk and return. Return refers to the benefit that is received by the investor from investing in the security. Risk refers to the possibility that the expected returns may not materialize. Example: a company may seek capital from an investor by issuing a debt security for a specific period, at the end of which the amount borrowed will be repaid to the investor. The return will be in the form of interest paid periodically to the investor. The risk is that the company may fall into bad times and default on the payment of interest or return of principal. Let's look at the structure of Indian securities market. The securities market has two interdependent and inseparable segments, namely primary market or new issue market raises capital by issuing securities to investors, and secondary market or stock exchange facilitates trade in already issued securities. Also, enables investors to exit from an investment. The primary market creates financial assets, and the secondary market makes them marketable. Issuers in the Indian securities market: private companies, central and state governments, local governments and municipalities, financial institutions and banks, public sector companies. Let's look at the regulators of the Indian securities markets. Securities and Exchange Board of India (SEBI) acts as the chief regulator of securities market in India, functions under the Ministry of Finance, facilitates a growth and development of the capital market, protects the rights of investors. Then there is the Reserve Bank of India (RBI), regulates the money market segment of securities market, controls the government securities market, decides the interest rates and borrowing costs of banks, government, and other issuers of debt securities. Thank you.